Welcome back. It's time now to take a look at the top business stories. Finance industry sees positive capital flows into Dubai. Eshrag raises 825 million dirhams in IPO. And IMF ready to give Greece more financial aid. Let's look at the stock markets first. Both the DFM and the ADX ended the trading week in the red. The DFM lost 0.7% to close at 1,596 points. Best performer on the exchange was Al Firdous Holding, which rallied 13.4%. Dia Development was also up by 2.6% as the company returned to profit in the first quarter. And mortgage lender Tamwheel was again on the upside with a plus of 6%. However, most stocks on the DFM lost. Takaful House, for instance, dropped 8.2%, Du was down 0.9%, and heavyweight Iman Properties dropped 0.6%. 355 million shares were traded, valued at 314 million dirhams. And over in the capital, the ADX lost slightly by 0.1% to close at 2,672 points. Other properties fell 2%, so real estate was down 2.1%. Energy company Taka lost 2.9% and National Bank of Fujairah fell 9.8%. Stocks to gain were first Gulf Bank, which posted a plus of 2.2%, National Bank of Abu Dhabi rose 0.4%, and Abu Dhabi National Insurance Company surged 7.2%. 64 million shares were traded on the exchange, valued at 139 million dirhams. And let's now take a look at the GCC markets, which ended mainly lower today. To talk a bit more about recent events, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Thank you.
Let's start with the United Kingdom. The Bank of England had out its quarterly inflation report yesterday. It sounded a bit more bullish than the last one in February. What do you think? Will we see rates being raised sooner rather than later?
Well, the Bank of England reported that they see growing inflation in the short term and that it could eventually reach up to 5%. Now, they have targeted 2%, and we now have inflation up above that and expected to be high into 2012 and then declining into 2013. This was a bit of a surprise, this new report, and they're now indicating that they'll likely see a quarter-point rate increase before the end of the year. The money markets are indicating that they think this will happen before November. Now, we're already seeing interest rates rising to consumers and to businesses. So it looks like we're getting closer to a rate hike. When that will happen is still unclear, but we probably have a few more months to go.
Let's look at China and the US. The two held meetings this week, and one topic was the exchange rate. Now, the US is pressing China to let its currency, the renminbi, appreciate faster than is currently the case. Why do you think will China give in and actually say, yes, we will let our currency gain strength? Are there any advantages for China?
Well, I think China will make the change when it's in their interest to do so. There's no indication they're going to bow to political pressure, as this debate with the U.S. has been going on for a number of years. The U.S. would like to see their currency appreciate faster against the dollar and other currencies, so it will make China exports more expensive and therefore U.S. exports cheaper. Now, China has been allowing for faster appreciation as inflation has become a greater threat. A higher currency is going to help bring down inflation because it lowers the cost of imports. So there is some benefit to China. So if inflation continues to grow, we'll probably see faster appreciation. Whether this will be fast enough for the U.S. remains to be seen.
Remains to be seen. Thanks for coming in. Thanks for your insights. Have a good week.
Thank you.
And now to our top stories. Finance officials in Dubai are seeing positive capital flows into the country, with some calling the UAE the Switzerland of the Middle East. That's according to a local paper. The UAE is seen as a safe and stable haven for investments. One statistics to prove this is the fixed income market. Companies have sold bonds worth $7.4 billion so far this year, more than 3 times as much as a year earlier. Investor confidence was boosted when Dubai World signed its final debt restructuring agreement with its creditors in March. Economists see the wealth from oil and gas as well as the young population as the two main factors to lead Dubai's recovery process. UAE property company Eshrag has raised 825 million dirhams, the targeted amount, through an initial public offering, highlighting a renewed interest in the property sector, according to industry experts. The IPO, which closed on Wednesday, is the first offering by a UAE real estate developer since 2007. The Abu Dhabi-based company, which is planning to list on the ADX within the next 2 months, has a total capital of 1.5 billion dirhams and offered 55% through the IPO. It sold 825 million shares for 1 dirham each. The proceeds will be used to finance current and future developments. And in our fast financial news, Dubai-based construction and engineering company Drake & Skull International said first quarter profit rose 21% to 51 million dirhams, beating analysts' estimates as the company expanded outside its home market. The company has won 2.7 billion dirhams worth of contracts this year in Oman, Egypt, Saudi Arabia and the UAE. Revenues jumped 67% to 645 million dirhams. Meanwhile, DR Development returned to a profit after 5 consecutive quarters of losses. The Dubai property company's net profit stood at 26 million dirhams in the first quarter, compared to a net loss of 100 million dirhams for the same period last year. Gross revenues reached 85 million dirhams. And after the break, we'll run you through what's making the headlines in international business today.